Hey everyone, this is Coach Sybil Kears, and I thank you for joining me for today's training in the Let's Talk Money group. And today I will be trying to cover a couple of topics, but they kind of all gel together, okay? So one of the reasons why I do these trainings is because there are a lot of people that I've encountered in sharing these wonderful opportunities, life-changing opportunities that are new to a lot of things, okay? So it's always going to be a learning experience for me and anyone else, but as information is passed to me, I feel obligated to also share it with those who decided to say, I want to become an investor. I want to know about the crypto space. I want to know how people are making money, right? And so part of learning this pretty much learning what to do, we also want to make our mindset be where it needs to be so that in the long run, we're not finding ourselves losing, right? The point of this is to gain. So anyway, tonight we're going to talk about the fact I want to reiterate that anything we do in any type of investments, whether it's crypto, real estate, whatever it is, businesses, stocks, foreign exchange market, I don't care what it is, there's always a risk. There's always a risk. And what does the risk equate to? The risk means that you will not get a gain, that you will actually suffer a loss, okay? So you have to embrace that. You have to let your mind accept the fact that there is always a possibility that any one of us who venture down the road of investors and taking our funds and putting it in investments, that there's a possibility there could be a loss. Okay, so go ahead and wrap your mind around that. Okay, if you find yourself scared to face that fact, then this is not the pool you need to swim in. Okay, I hear this phrase, scared money don't make money. In a way, that's true. You know, if you want to stay safe and secure, then keep your money in the bank and let them pay you 0.01% a year on your money while they're taking your money and investing it in the things that we're doing and earning millions and giving you 36 cents or whatever, right? So anyway, so again, wrap your mind around that, okay? The next thing that with the risk, we need to exercise common sense. We need to exercise good judgment. And then we need to figure out what it is that we need to do to kind of protect ourselves, right? So it's kind of like having insurance. We don't drive our car every day with the hopes of saying, I'm going to get in an accident today. But we get insurance because we say, just in case it happens, at least I won't have to suffer the whole damage payment or whatever it is I would have to pay if I didn't have insurance. I won't have that much out of pocket expenses, right? So we get insurance because, again, we're not hoping to get in an accident, but we know that just in case we do, that's when we have the insurance to be there to help us soften the blow, the financial blow. So there isn't any insurance that we can purchase to protect our assets, but we must do things to try our best to protect ourselves with what we have to work with. The crypto space is a fairly new space. And so there's always new things developing. It's always ever growing, ever evolving, right? But as we venture out into these opportunities, we have to figure out ways that work best for us at the level we are at and how much money we have invested and where we're trying to get to futuristically, okay? So let me share my whiteboard real quick. All right, so just wanting to kind of go over some of the information that I have up here. Excuse a little mark, but anyway. All right, so the first thing I'm gonna touch on is gonna be talking about diversification. Like that, you'll hear me say that a lot, diversify your funds. What does that mean? So when you think of anything diverse, it's basically a multitude of different things, right? So when as an investor, you look at it, diversification is a key investment strategy for reducing systematic risk in a portfolio while maintaining levels of expected return, all right? So in layman's terms, it's basically not putting all of your cash in one bucket. It's not putting all your eggs in one basket. It's allowing you to have multiple different areas that is producing growth with your funds, so that if this basket of eggs should fall and all the eggs crack, you might have 2 or 3 more baskets that you can fall back on to recover. Does that make sense? Yes or yes, right? So you want to not, I know we have access to these wonderful tools, and the one that everyone is going crazy over is because of the great return on investment that it is. It's astronomical. It's by far mind blowing. It's probably one of the best financial vehicles I've ever had the pleasure of investing my money in, as far as the return and how swift and accurate and how easy I can access my assets, right? But and so that might spoil a lot of people, because now if that's the first thing you've ever invested in, you may have high hopes on other platforms. That is unusual. It's not something you'll come across every day. There are other things that are out there that will definitely give you a return on your investment. However, you just want to make sure that you diversify your funds in various things, because nothing is guaranteed, not in the world of investment. Okay. Nowadays, employment isn't always guaranteed, right? So I can't think of not one thing that involves money that I can say is guaranteed. I really can't. Okay. So here's a diversification strategy that I use, and it has been able to allow me to spread my cash in multiple buckets. Okay. So you research other investment opportunities. If you are part of LTM, let's talk money. I bring these opportunities to you. They have been tried by my investor partners as well as myself, meaning we put our money in it, we see how it works, we determine if it's like a good thing or a bad thing, did we take a loss, whatever the case may be. I don't bring everything that's brought to me to this group, because everything is not something I want to be in. You know what I'm saying? So, but at the end of the day, if I put anything in this group, it's something that I put my own money in, right? So I kind of do some of the research for you, but you should never just rely on me or anyone else when it comes to your money. The goal of my goal for this group is to help everyone reach financial independence. Okay. Financial stability, we hear that term. You could be financially stable with a job. Financial independence means you don't have to rely on anyone regarding your money. You know how it grows, you know how to access it, you know where it's at, you know how to get to it, you know where to put it. That's financial independence. You know how to manage it. You know how to use strategies to make sure that in 5 years from now you're not back in the same boat when you started before you started investing, right? So that's financial independence. And so that's my ultimate goal, to help everyone in this group who desires to become financially independent to have those tools. Well, as an investor, that's one avenue that someone can reach a form of financial independence. However, you need to exercise due diligence of your own money and always do your own research, even if it's just asking questions. Don't always rely on YouTube, because that is a platform that people use to get content out there so that they can get paid. So the more viewers they have, they get paid. And there's people that make a lot of good money from just being content creators, okay? And so a lot of times they'll put controversial things up there just to make other people watch their videos. So if you have a platform that's working well, you may search on YouTube and they'll say it's a scam, it's this, it's this. Well, guess what? People love scam and they love scandals and they love getting into it. So guess what's going to happen? Their viewership is going to increase. Then they have a probability of getting paid. And so it's not always that it's true, right? So you definitely want to do your research. And one good way to research is to ask people that's already in it. Find out the people that are already have experience with it, okay? Then you want to establish a plan. You never want to go into nothing blind, okay? Initially, it's kind of overwhelming, so you kind of have to figure out what you need to do, what it is you have to do. You don't really know. You're relying a lot on your upline or the person that introduced it to you. But as you begin to get more familiar with this and looking into diversifying your funds, you want to develop a plan. One of the things that you should do when you are establishing a plan, you want to research how much are you going to need to invest. Don't ask someone else, like, what's a good amount? You need to know. How do you know? Because number one, what's their minimum requirement? Some platforms require a minimum amount for you to even join with them. Number two, how much is your return? Okay. One of the platforms that I have invested in, they have two tiers. One tier is anything under $22,499, between $100 and $2,499. You could jump in. So you might say, hey, I could afford $100, $200, but the return on your investment is only 1% a day. And let me correct myself. 1% a day is still great. Okay, let me retract and rephrase. 1% a day is great because there's no banking institution that will charge you, that will give you 1% a day on your money that you have in their institution. Okay, so 1% a day is good. Like I said earlier, some of us have been spoiled by some of these other platforms, but whatever. I stand corrected, and I corrected myself, and I apologize. 1% a day is good. Okay, it's 1% more on your money that you are getting, that you have no other place that will give you that type of return on your investment. Okay, so but if you were to do a $2,500 investment and up, you get 3.3% a day. Okay, and that's a 5-day a week, not 7 days. And so it's 30 business days. That's your initial investment. Capital will be tied in, and every day you'll get the same amount for those 30 business days, which equates to 42 days, which is 6 weeks. All right. So now you're planning, because you can go and get any calculator and multiply whatever your amount is that you put in as your initial capital, and multiply by 3.3%, and you will now know what you stand to earn every day. Okay, so your next plan is, okay, at the end of this contract, how much money will I have? Right, you determine what that amount will be, and when you get to that point, you will now have your profit and your original capital of whatever amount, $2,500 and up. Right, you now have a decision to determine, will you compound it by adding it, or will you take that money and just leave the $2,500 in there and just be glad with this extra amount every 6 weeks? You have to have a plan. Okay, that platform I was talking about, they do not compound at those levels. They have higher levels that do compounding up to a certain point. However, it's not a compounding, it is a daily interest, but it's not compounding interest. So just to say, or just to reiterate what compounding interest is versus simple interest. Compounding interest means you have your original capital amount, whatever your original investment amount is, and any profits you gain adds on to that principal amount, and then you gain interest on that increased sum of original principal plus profits, and that keeps happening, and you're compounding all of your profits into that amount. Okay, and the overall percentage is applied to the entire amount, not just your original capital. So that platform I was mentioning does not compound, but you can compound every 6 weeks. How? Because you got your original capital, let's say it was $2,500, and you earned $82.50 a day for 6 weeks, for 5 days a week. Well, if it's counted for 30 days, that'll be $2,400 some dollars, right? You now have an additional $2,475, give or take, and plus your $2,500 capital, right? So now you can either determine, hey, I would like to earn more than just $82 a day. Let's put all of these profits in with my original capital, and now I've almost doubled my original capital and enter into another contract for another 30 business days. Okay, so now your daily profits will increase, right? At the end of that 30 business days, you will now have had interest off of that total combined amount, and that means you have more profits, right? So now you have a determination to make. Are you able to live with that? Are you ready to pull your seed capital out, your $2,500 out, and just roll over all of your profits and just live off that? That is completely up to you, but you have options at this point, and now you must establish a plan. Okay, Then there's other forms of investment vehicles that, like I said, you just want to look into what it is you plan to make. What is your objective? What is your goal? Don't go into anything just saying, I want to make money. That is not specific enough. Okay. So in that example I gave, if I had about $7,300 as my original trading capital on that platform I was speaking about, I would potentially yield, let's say, $1,200 a week, right? Faithfully every week for 6 weeks, I will have $1,200. For every 5 days, I'll have $1,200+. Okay. So I can just decide at this point, I've taken out my $2,500. So none of that is my personal funds. It is all profit. I'm earning $1,200 a week consistently. Could I live off that? Would that be able to replace some income, household money? Yes. Then I can plan to say, okay, for this vehicle, I'm just going to leave it capped at 7,300 because that'll be my month-to-month expense money while I allow my other assets to grow and I don't have to pull from that. That's a plan. Okay. So you have to find out what plan works for you and your goals. Okay. And I would love to sit down with someone to help you figure out what your goals are, things like that. I will open up the ability to have small times of consultation with people because I do recognize that this is something that's needed. But this is a general type of training to get your wheels turning so that you can start thinking along the lines that you need to think of. All right. So now, like I mentioned, you withdraw your original capital of whatever investment. That should be your first goal. If you watched one of my previous trainings, you remember I talked about that. You want to withdraw your original capital in whatever investment you've done. Okay. If you put $200 in one platform, you should be gauging, having a plan of when is a good time to take back out my capital without it hurting my profits. Okay. And then you want to either determine, did I gain enough capital to where I can do an additional withdrawal of profits and put it over here in this different platform? Or should I use my original capital that I just pulled out of this investment and put it in something else? You plan for that and make a determination. And of course, when you get it involved, if you use profits from one investment option and put it in another, that becomes your original capital. Yes, it was profits, but now that you invested in something else, that's original capital. You want to pull that out. Okay, so you can have that to use for your month-to-month household bills, school clothes, whatever you need it for. Okay, so that's basically a strategy. I was just giving a broad strategy of how to look into diversifying your funds from wherever you are in your investment, determining where else you would like to go, what are some of the goals you want to reach financially, and what are some things, why are you investing? Are you looking to draw more income into the household? Are you looking to pay off debt? Are you looking to replace your employment? Are you looking to add more? I mean, whatever your goals are, that should be in your plan. So now you can get a journal, get a trading or investment journal, and document what date you went into what, how much was you should always know what your original capital was in any opportunity you have decided to be a part of. And then you should always document, when did you do your withdrawal? How much have you profited? Know your stuff, become financially independent. Okay. So if you have any questions, rewind the video and hopefully you'll find your answers. If not, my inbox is always available to you. I'll probably respond within 24 to 48 hours, depending on how many other messages I may have and whatever else I may have going on. Okay. So now I want to talk about briefly, just briefly. Okay. Now I want to talk about the blockchain. You guys may hear it. Some of you are dealing with cryptocurrency, might be a whole new arena for you. It's like, what in the world? What is TRC20? What is Bitcoin? What is these wallets they're talking about? what is a wallet address, right? It may seem so overwhelming, okay? And I'm not going to be able to explain it to you overnight, okay? But I'm just going to kind of give you a synopsis of what it is and some other ways to try to protect yourself, okay? So the blockchain is the platform where our digital assets are basically tracked, okay? It's like a public ledger. This is where if I send someone a cryptocurrency, it is traceable on the blockchain. That's where the transaction happens. They're called miners. The miners will see the order was placed in to send Bitcoin from Cash App to Exodus, let's say. And they will mine it. And just like people go, you think about mining, people go mine for diamonds, they mine for gold. They're digging through to get out this asset to carry it somewhere else. It's symbolically the same, okay? And so on the blockchain, it's basically a network that allows cryptocurrencies to be tracked, to move on it, and that's where our cryptocurrencies move on. Okay, so if you hear the term blockchain, that's what it is. All right, a cryptocurrency wallet basically is a virtual wallet. We can download apps on our devices that will give us access to these virtual wallets. So when you're thinking of cryptocurrency, we don't call it cash, right? Cash is the US dollar. Um, it's an asset. So when it comes to taxes and you start making all of this cryptocurrency money, the IRS is subject to look at you and want to tax you for capital gains because it's an asset, okay? So your assets, which is your money in cryptocurrency form, has to be stored in a place that can recognize what this format, what type of money is this, right? And so virtually, these wallets exist so that your cryptocurrency has an address to park at, okay? That's called the wallet address. So it's kind of like those of us that carry wallets, we put our cards or our cash in there. And that's why I guess they chose that term to describe the cryptocurrency wallet, because we're parking our cash in there, okay? But in order for us to tell the blockchain where to send our funds, it has to have that address, and it's going to be a stream of letters and numbers and capitalized and lowercase, so and so and so. All right, that's the address that the blockchain will know this money needs to get to this place. So if I was sending you a check and I put it in an envelope, what would I need to put on the envelope? Your address, so that it knows, so that mailman knows, take this check to this person or this address, right? Same concept. So there was recently an article, and I posted it in this group. Go back and read it. Coinbase is saying, like, listen, if we ever go bankrupt, whoever has money, cryptocurrencies with us, you're probably going to lose it because we're probably not going to recover. So if your money is with us and we go down, you're going to lose your money, right? So that is very much discomforting, right? Especially, I don't have money in Coinbase, but a lot of people do use Coinbase, you know? And if you do, if you know someone that does, like, it's not to panic and say, oh, I need to go get my money out, but read the article, educate yourself. You know, if that's where your money is and you want to be financially independent, then you need to know what's going on with the institution or the company that is holding your funds. Okay. So I have invested in what's called a cold wallet. All right. Let's see if I can pull it up for a second. Let's see, hang on a second. But a cold wallet is basically a device. It's a device that allows you to, okay, I can't do it. It allows you to access your funds and place it in a physical wallet. It's like a device, and it's completely detached from the internet. Okay, and it allows you to store your assets there in a safe, secure, fireproof place. Let me see. I'm going to, hold on a second. I think I could do this. Yeah, I could do this. Cool. All right, so let's see. I'm gonna pull this up and share it with you guys so you can kind of get an idea of what I'm talking about. All right, so hopefully you're seeing this screen. All right, this is one of the types of wallets that a cold wallet. So it's a device. It kind of looks like the phone, and you would basically connect it using QR tags or whatever system it allows. You would transfer your funds to it. Instead of it sitting in Coinbase, it would sit here. And then when you're ready to use it or move it, you would use whatever instructions is available, okay? So so for example, if I have $1 million in one of my investments and I'm ready to pull $600,000 out, okay? I go and I do a withdrawal to my virtual wallet on, let's say, Coinbase, right? There's millions of wallets out there. I'm just using Coinbase because it was on the top of my head to mention. So I withdraw it. I have a wallet set up on Coinbase. My $600,000 goes to Coinbase, okay? At this point, it will probably be in the form of TRC20, Bitcoin, whatever cryptocurrency it is. I'm either going to have to convert it to US dollar or purchase something that is big, that allows purchases with that form of cryptocurrency, whatever it is, right? So I'm most of the time to do conversions to US dollar, there's caps, right? You can't withdraw but a certain amount from your bank at a time using your ATM. They have daily caps, there's daily this and daily that. So you have limits, right? So I'm not going to be able to just withdraw $600,000 and expect it to be in my bank tomorrow. Okay. So I'm going to have to plan to get this money converted to how I'm going to use it. So instead of me leaving it on Coinbase until I finish those transactions, I can send my $600,000 to my cold wallet and then do the transactions based on the time frames that these conversions will allow me to do. Okay, so that's just some theory that I wanted to offer you. I'll put a link to the wallet I purchased that I invested in. It's under $200. They even come with something to store your keys, that when you have these wallets online, you get a key, not a physical key, but it's like a 12 phrase words that is only assigned to your wallet. If you lose your wallet, as long as you know those phrases, you'll be able to get access to your wallet. So I'll put a link to both because I was able to get a great deal on a combo package. But yeah, you definitely want to look into that and protect yourself. All right. And as when I get the time, I will definitely do a training on how to establish your cold wallet, how to use it, what you need to do, how to do it, so on and so forth, right? Again, this is always an ever learning experience. So just to recap, we talked about being an investor and how to protect yourself. One way is through diversification, making sure that all your money is not in one basket, making sure that you have multiple ways of making money simultaneously, multiple streams of income. We hear that, right? The strategy I propose is to simply make sure you have researched what you want to do, what other opportunities there are, what is their minimum requirement, what is the return on your investment, what is the percentage, do they compound, do they not? Then you want to establish a plan because you should have a financial objective or a goal that you're trying to meet. Then you will make sure in the current investment you're in, you'll pull your seed money out. And if you have additional money from your profits, you can also pull that out if you decide to do that. Meanwhile, leaving at least 1/3 in there to continue to grow, right? And then you will determine, do I need to take my seed money and put it in here, or can I use the profit money, or can I combine them both and use it as an original capital investment on another investment vehicle. Okay, so that's a form of diversification and a strategy that you can use to try to get involved in other opportunities to protect your money. The why is that a form of protection? Because in the event one of your investment opportunities go down, you have something else that's making you money that you could bounce back from. Okay, we talked about what the blockchain is, understanding that cryptocurrency travels, moves, and is tracked on the blockchain itself. It is a network. And then we talked about what cryptocurrency wallet is. It is a virtual wallet that your assets, aka your cryptocurrency, is stored in or placed or parked in, if you will. I'm using that term loosely. And so if the organization that gives you that access to that virtual wallet, be it Exodus, be it Trust, be it Uphold, Cash App, Coinbase, whatever. There's several out there, okay? Kraken, Clever, there's so many. But in the event that that organization should go down and your money is tied up in it, you're subject to lose it. So we talked about why we should try to get a cold wallet. Means it's a detached device that you can put your funds or your assets recorded in it instead of sitting in your virtual wallet until you're ready to move it and convert it to what you need to do with it. Okay, so that concludes today's training. I'm hoping that it was informative. I hope that you do watch it. And again, if there's any questions, just remember, drop it in the comments below or inbox me however you see fit. Okay, continue to grow your accounts as best you can and stay plugged in. I will continue to share information that is as it is provided to me. I will place the links to the cold wallet under this video so that you can get access to it if you decide that that's something you want to invest in. I know I did. So anyway, guys, this is Coach Sybil Kiris with Let's Talk Money. Much love and success. God bless.